Hello, everyone. This is Alan Wang with the Alan Wang Realty Group at Keller Williams, Santa Clara Valley. I'm really excited to bring to you the June 2024 Silicon Valley Real Estate Update. Without further ado, let me jump right in and discuss our current marketplace. I would say the title of this month's topic is that the best news today is that inflation is cooling. And what does that mean for the real estate market? First of all, I'm going to talk about the market. Of course, interest rates has been a big topic of discussion. The inventory levels still remain low. However, we are in the summer months, and there are a lot of buyers traveling and going to different places with their families, with sports and vacations, etc. So that's created a little bit of a different dynamic in the marketplace. So multiple offers are back, but not necessarily every single property is selling with multiple offers because of the fact that a lot of folks are gone for the summer. So there is a little bit variability in the marketplace. I will say if your property is in a good school district, it's going to be just fine. But if it's not, then there may be a little bit of variability in how that market is going. As far as inflation is concerned, we're going to discuss that today. Of course, interest rates, stock market, and employment. These are the four economic indicators that I evaluate our local as well as macro economy. Well, let's discuss inflation. The last inflation report that came in May was that the inflation was at 3.3%. There was an article today that core inflation actually came down to 2.6%. And that is as of June. And so these are early numbers for June. This was reported by Barron's. So that is actually, if that is the rate that's coming down to, this is in fact what the Federal Reserve wanted the interest rates to be at. And we've been hovering in the low 3% range. Now, I don't see the Federal Reserve overreacting and trying to do too much here. They'll probably want to see multiple months of a stable 2.5-ish% inflation rate before they decide to do anything with the interest rates. However, this is a sign that this core inflation rate is settling down. The interest rates are also coming down a bit. We are at 6.87%. This is nationwide. This rate was hovering around 7% for a little while this year. So the interest rates are coming down as well. Now, these are, mind you, conforming loans. The Bay Area is predominantly, we have jumbo loans, which tend to be a little bit more flexible on the rate. 30-year fixed is at 6.375 with a 1% discount point there. And so again, good. I mean, we were hovering last year around 7% plus. Most of this year between 6.5 to 7%, and now in the lower sixes. This is a good sign that mortgage rates are coming down a little bit, and that's good for home buying. Now, the big question is what happens if the Federal Reserve does lower interest rates? There will be yet another frenzy of buyers that are entering the market who can now afford a property. And so be wary of that. If you are a buyer, you might want to jump in now before the frenzy comes yet again. The Nasdaq is on an extreme rise here. We're definitely at record highs. I mean, during COVID, we saw a gain of 21%. There was that 33% decrease when we figured out that inflation was at 9.1%. Last year, the market rebounded 30%. Yeah, now we're up yet another 12.7%. So the total net gain is 30.7%. And the reason the Nasdaq is important because at least in the Silicon Valley, this is a source of down payment for the majority of our home buyers. And so this is a very important metric, extremely healthy. Folks like to diversify out of their tech stocks and move them into real estate. Unemployment during COVID, 16%. We're hovering around 5.2%. I usually see this metric at about 4.5, 4.6%. And that's because of the tech layoffs that continue to happen. Companies continue to trend to lay off little small layoffs here and there. I've not seen any, again, red flags for the Silicon Valley market. No short sales on the horizon, no foreclosures. Again, lending has been very conservative. So one spouse should be able to carry the property. So no red flags here. My projections are that inflation is down for now. The Federal Reserve is going to have to see a few more months of this before they do any drastic changes on the rate. And so we will see if Q3 or Q4, if they decide to lower rates or not, or if they wait till Q1. It'll depend on the data. Again, NASDAQ is in a bull market. So overall, everything's healthy, especially for the Silicon Valley and the macro economy. As I mentioned, sellers inventory is low, but it kind of depends. If you're hitting the summer months and there's multiple competitors, your house may not sell within a week as we're used to, or 2 weeks as we're accustomed to seeing. We might sit a little bit longer than normal as there are more choices and less buyers around for the summer. So generally, though, the single family home market has been doing well. If you are a townhome, it's a little bit variable. A lot of folks are moving from single family to townhomes due to affordability. And so that market is overall picking up a little bit, but not necessarily on fire necessarily either, but recovering pretty nicely. And the condo market is still recovering. You still have opportunities there in the condo market. They're not necessarily all flying off the shelf. You do have some options there. But again, as a seller, as I say every time I discuss this with you, pricing properly is the key. If you're not pricing right, your house will sit. Buyers will consider your house overpriced. And the market will tell you what they feel your property is worth. And I do suggest you listen to the market when they do that. But the buyers eventually will get fatigued. However, I don't know if this year is going to be that year because as soon as they get fatigued, that rate will likely drop and suddenly there'll be another frenzy of excitement with new buyers who can afford different price points. If you're a buyer, this market continues to not be for the faint of heart. It's you got to be in there. You got to be in it to win it. If you're looking for a deal, yeah, maybe if you're buying a condo, maybe we can get one there, possibly a townhouse, or maybe one of these single family homes that are not necessarily in a great school district, but competing with multiple properties on the market. You might be able to go in and not necessarily fight as aggressively, but there are strategies that we will advise you on doing. Again, if you're bidding, highest and best is one strategy. Second possible strategy is going in, having a second round available, but try not to play games because these other buyers aren't. And with that, that's your June 2024 Silicon Valley real estate update. Give me a call if you have any real estate questions. Real estate is very personal. I want to make sure that I customize a plan for you. Call me at 408-313-4352 or text me. Email is always great, alan@alanwanerealty.com. You have an amazing rest of the summer. I look forward to seeing you and helping you and your family with your real estate needs. All right, bye-bye now.